Hello, guys. Welcome back to our YouTube series on Unravelling Entrepreneurship. This is your Dr. Himanshu back with another question. So, guys, if you remember in our last discussion, we actually talked about, what is the right time to, seek funding. When should you go out in the market and ask for funding? So today we're gonna cover another very similar kind of a question because budding entrepreneurs do have this thing in mind, like at what stage, what kind of an investor one should approach. So guys, in today's session, this small video would definitely answer this question very well. So I'll tell you, whenever the startup you know starts off, the first thing that any founder entrepreneur need to do is to put in his or her own money, because until unless his own money is invested, later down investor will always be asking you. I mean, you yourself did not had much skin to your own venture. You did not had put in your own money, and you did not took your own risk. Then why should I take it, right? So definitely, any startup starts off when you invest your own money into that, and that's the way to begin. In the very early stage, when you are at an idea stage itself, I mean, you your own money, I mean, you will have your own faith in your own idea, and that's how you have to begin with, by spending your own money. And probably your savings will come to picture here, and after those savings, probably the next thing that you could do is reach out to your friends and family who could believe in your idea or believe in yourself, that you can really take this venture to the next level. So yes, you have to start as a bootstrapped startup, with investing your own saving as a founder, and then probably taking some money from friends and families, and some near about people. And then only you get to a pre-seed stage. So at pre-seed stage, then definitely there are certain incubators, accelerators that could help you, and develop your idea into a prototype, and then probably help you to at least hit the market and scale in the market in a very initial stages. And so at that pre-seed, these incubator accelerators, there are many such institutions who are really doing a fantastic job to support this startup ecosystem. After that, when you grow a little further, and you want to take some seed round, for that matter, there are some angel investors. So they are like high net worth individuals having some good money with them, and they want to invest in a high risk capital in a startup, and that's how they are called as angel investors, and they can really help a startup to grow at a very early stage. And there are certain VCs, venture capitalists, which are early stage VCs. They invest in a seed round also, at a very young age startup. And definitely after a startup grows to series A, B, C, D, and whatever, there are private equity players. There are some big VCs who are there putting a lot of money, and supporting the founders to scale at a very high level. And the last stage for a a company, a startup venture, is to have an exit, and that happens like probably you raise the fund from public, which is coming out with an IPO, which recently Zomato, Nykaa, Policy Bazaar did. So that's where you could raise from the public at large, or probably in the journey you might get acquired by some big shark, some big player, and you might be acquired also. So that's another way. So that's about it. So there are like these different kind of investors supporting a different life cycle of a startup venture. So guys, you need to be very careful as to when and how to approach them carefully. So that's about from my side today. Thank you so much, guys. Take care.